What's going on, everyone? Welcome back to the show. So I am going to show you something that I know is going to get you guys fired up. Now, we're talking about Social Security today, and let me just show you the headline here, and we're going to break this down. So this was just posted, what was it, earlier today, or actually it was yesterday. It says, U.S. recovers $31 million in Social Security payments to dead people. Now, we heard a little bit about this. You heard some politicians out there saying, we're paying money to dead people, we're paying money to dead people. And so I want to break this down. I want to take a look at the reason why this is happening. And then I want to take a look at how the Social Security Administration, the U.S. Treasury, how they're handling the situation. And then I want to talk about my fears, because it's good news that they were able to recover $31 million. But what does this mean for the future of Social Security, and how are politicians going to play this? And so that's what I want to focus on in this video. But first off, you guys can do me a favor, please like the video. And if you're watching this video and you want to see more content like this, please consider subscribing to the channel. And also, you could follow me on Blue Sky. I'll have a link. It'll be in the comment section. It'll be pinned at the very top. Click on that link. It'll take you over to Blue Sky, and you can follow me. And I also have a feed for the Social Security Fairness Act. So if you are watching me primarily to find out more about the Social Security Fairness Act, you can also go to Blue Sky, click on that feed, and it'll give you up-to-date information on what's being posted about the Social Security Fairness Act. And then one more thing, if you have a story or if you have a question, and it's maybe a more comprehensive question, you can send me an email, david@thetecshow.com. And what I'm doing right now is I'm starting to get a lot of emails. So I'm picking certain emails and I'm creating videos on those emails. Okay, so just so you guys know what's going on, I might not respond immediately, but that's because I'm putting together a video. So you might see a video about your question or a video about your story in the future. Now, when I post stories, when I post any information, I'm only going to put your first name. So I will redact the rest of the information. So your last name and all that, your email address. I'm not going to put all that out there. And so it'll just be your first name. Okay, let's get back to this. We're going to take a look at the article. Actually, what I'll do is I'll break this article up a little bit, so it's not going to be the full article, but I want to take a look at just some of the interesting findings from this article. So, and this is ABC News if you guys didn't see before at the top there. And so it says here, the U.S. government has recovered over $31 million in Social Security payments that were mistakenly issued to deceased individuals. This recovery is part of a 5-month pilot program following Congress's 2021 authorization granting the Department of the Treasury temporary access to the Social Security Administration's full death master file. This file, containing over 142 million death records dating back to 1899, enables the Treasury to identify and reclaim improper payments. And so you see, this is a pilot program. It's good that they're doing this. I think this is good news that they're actually looking into this and they're trying to recover this money. Now let's go back to the article here, because they do say some more things here. So it says the Treasury anticipates recovering more than, look at this, $215 million during the 3-year access period from December 2023 to 2026. So they're actually moving forward. So they're 2023, 2024, 2025, and 2026. They're going to be using all of that time. And so even in 2025, we're going to see they'll have information coming in, and hopefully they're getting better with this, because if it's 2025 and 2026, they can do some things right now in order to keep this from happening. And so this brings me to the question that I had in my head when I was reading this article. Why is this happening? How is this happening? So let's take a look. And I took some of this information from the Social Security Administration website, and then there were several articles out there talking about this very issue other than the ABC News article. And so the main issue that we're seeing is a delay in the death record updates. So the Social Security Administration maintains a death master file which tracks death records. There can be delays in updating this file, especially if the state or local records are slow to report the deaths. And so if we're in a situation where the Social Security Administration is not getting the information they need when it comes to so if someone dies, they don't get that information, they're still sending out those checks. And those checks are going somewhere. And we know now direct deposit, most people are receiving their checks in direct deposit. So where does that money go? And how do they get that money back? And so I will focus on that at the end of this video, how they get the money back and where does it go. But let's go back. I want to take a look at some of the other things that they're saying as far as issues. It says gaps in data sharing. Until recently, federal agencies like the Treasury had limited or no access to the SSA's complete death records. Okay, so what we need here is we need communication between the two agencies. Without this data, agencies couldn't cross-check and stop payments to deceased individuals. And so you guys understand, when it comes to the Social Security Administration, you're not getting a check from the Social Security Administration, you're getting a check from the Treasury. But the Social Security Administration, they provide the information to the Treasury so the Treasury can send out the checks. And so if you have better communication between the two agencies, then they'll be able to catch this a lot sooner. Okay, let's continue. Automation limitations. The Social Security payments are often automated for efficiency. If a death isn't reported or processed in time, payments may continue to be issued to bank accounts and addresses tied to deceased. Okay, so in situations like this, in order to get your checks out as soon as possible, it's automated. And so if you do have a death, the Social Security Administration needs to catch that. And this is another issue when we're talking about staffing. You need to have staff to catch this, because I don't know what type of a system they have, but even if it's a computer system, it might not pick up the fact that I'm imagining if you put that information in there, well, we all have a Social Security number, so maybe that's what they use, just put the Social Security number in there and say that that person is now deceased, then the computer needs to pick that up. But you have to have someone putting that information in. So I don't know exactly how it all works, but I'm just saying when it comes to automation, automation is making it more efficient so people can get their checks sooner, but it's also a part of the problem, because if someone dies, it's going to continue to send out those checks until it's told not to. Okay, and then fraud and oversight issues. In some cases, relatives or others may intentionally fail to report deaths to continue receiving payments fraudulently. This happens, and you see it in the news. I won't say all the time, but you do see this coming up where let's say your spouse passes away and you don't report it, and the funeral home doesn't report it, and so they don't know, the Social Security Administration doesn't know, they're continuing to send out those direct deposits. It's going into a joint account, and you're spending the money. And in some cases, people do this for years. And then, of course, when they get caught, they're prosecuted, and they need to pay the money back, but usually they're not going to be able to pay the money back. Sometimes they might get arrested, go to jail, even go to prison if they're found guilty, and so they're not going to be able to pay the money back. So the money is pretty much gone, and so that's a problem. I'm not going to say it's a huge problem, but that does exist. That does happen. And then the last thing here says lack of strict oversight and interagency collaboration allowed the payments to slip through the cracks. And so you can see communication right now is probably one of the bigger issues. Okay, historic challenges. Death records date back to 1899, meaning errors could persist for years without proper verification. It's only recently that the advanced systems and access to comprehensive records have allowed the government to identify and recover these payments. And then it just says here, by gaining access to the SSA's full death file through the pilot program, the Treasury can now more effectively identify and reclaim improper payments, ensuring taxpayers' dollars are better protected. Okay, so I want to dig in a little bit deeper, just a little bit deeper. We're going to talk a little bit more about some of the issues that the Social Security Administration is facing when it comes to this. So it says immediate continuation of payments. We talked about this, so automatic payments are still going out, and so they need to be notified. And so why is this happening? The SSA is not automatically informed of death, so payments continue until they receive official notification. So they will continue to send that money out until they receive something official from, and they talk about it here. Let's go right back to it. It says notification sources. Deaths are usually reported by family members, funeral homes, or state agencies. And so that's generally how the Social Security Administration gets that information. But if they get it and it's delayed, then those checks are still going to go out. And that money is still going to go into an account, or a check will be mailed out. Now, if a check's mailed out, most people now are getting direct deposit. But if a check's mailed out, obviously, it's most likely not going to be cash unless it's fraudulently cash, like someone takes the check and cashes it. But if the individual is no longer here, then they're not going to be able to cash that check. And so that money doesn't go anywhere. And then as soon as the Social Security Administration finds out that this person is deceased, then they can go ahead and void that check. Okay, so let's talk a little bit more about how they recover the payments. Okay, so it says a policy here, the Social Security benefits are paid in arrears for the prior month. For example, if someone dies in March, the benefit paid in April for March must be returned. So let's say your spouse passes away, you guys have a joint account, you receive that Social Security payment in April, you're supposed to send that back. Okay, so let's move forward. It says recovery process. For direct deposit, banks are legally required to return payments made after the recipient's death to the Treasury Department. Now, the only issue with this is the bank has to know. And so the bank might not have that information. So if the bank doesn't have that information, then they're not going to be able to, to hold those funds. And so this is a big problem with communication. As soon as they can get the communication down, then I think it will, this is not going to be a huge issue. Okay, so let's go ahead and continue here. It says, if funds are withdrawn before the bank can act, the Social Security Administration will recover them from the estate or next of kin. Okay, so that's why you could have situations where you owe money to the Social Security Administration. And that could be why, because you've taken money that, and sometimes you might not, you might be in a situation where, a loved one's passed away, you're not thinking straight, you receive money, you're spending that money, and then you realize, oh, you know what, I messed up. I didn't realize that that money was coming from my deceased husband or deceased wife's Social Security. And now you're in a bind where you do need to pay that money back. And then the last thing here, fraudulent use of funds. Okay, some people will purposely do this, right? And so if a joint account holder or another party knowingly uses benefits deposited after death, it's considered fraud. Okay, so this is fraud. This is a crime. Consequences. The SSA can take legal action to recover the funds. So they can take legal action and criminal action. Well, the Social Security Administration is not taking criminal action, but prosecutors can prosecute you in this situation where you knowingly are taking money from someone who is deceased. Okay, so now I want to talk about my concern. My concern with this, when it comes to politicians and how they're going to handle this, is that now that we're seeing numbers, we're seeing $31 million was recovered, $215 million they think that they'll be able to recover over the 3-year period. You're going to hear politicians out there saying, look, Social Security is broken. We need to change the system. We need to privatize Social Security. We need to do away with Social Security. That is my fear. And this is an issue, yes, but this issue is coming from communication. If they can improve communication and beef up the workforce in the Social Security Administration offices, then maybe this won't be happening as frequently as it does. That's the bottom line. But you're going to have some politicians, they're going to want to do the reverse. They're going to want to say, no, let's just do away with it. Let's privatize it. We'll allow you to pay your payroll, the FICA contribution, but have that money go into a separate fund just for you. And it sounds good. And some people might say, yeah, you know what? That sounds like a good idea. I can invest it on my own. I don't have to worry about the government sending out Social Security checks. But the only problem with that is we know this is a pay-as-you-go system. And so people right now who are working, they're contributing the contribution. That money is going straight to beneficiaries. And so if you cut off that stream of money, then the people who are currently receiving Social Security benefits, the people who were promised that they were going to receive Social Security benefits, they're going to have to take a cut. And in some cases, I don't know how they're going to, it wouldn't work. They wouldn't be able to do it that way. But what we're hearing some politicians say is, well, you know what? We're not going to privatize it completely. We'll privatize just a little bit. And so currently right now, 6.2%, that's what you contribute. Your employer matches that 6.2%. That goes to the Social Security Administration to help pay out benefits to people who are currently receiving benefits. But let's say politicians say, well, we don't want to privatize it completely, but let's say 2% so your 6.2%, instead of 6.2% that you're contributing, you're going to contribute 4.2%. And then your employer will probably still have to contribute the 6.2%. But that 2%, you can take that and you can invest that on your own. Some people are going to look at that and say, well, this is a great idea. I have a 401k, and then I also have this little investment on the side, but you're taking that 2% from the people who are currently receiving benefits. You're taking that out of the pot. And so now you're expediting the trust fund's depletion because there's less money coming in. And so it's not a good deal. It really isn't. But you're going to hear politicians talk about this. We need to do away with Social Security. It's not working. Now, we need to reform Social Security. I would agree. But the way that I think we should be reforming Social Security is raising the cap. So right now it's $176,100. Once you get over that earning amount, you no longer have to contribute to Social Security. That's an issue. I think that needs to be addressed. And then raising the payroll tax across the board for everyone who is currently working. You raise that payroll contribution across the board, you're going to bring in more revenue for the Social Security Administration. You raise the cap, you're going to bring in more revenue for the Social Security Administration, and that will go to help pay out benefits and then extend the program out for another 50 years. That's what we need to be talking about. But instead of that, you're going to have some politicians that are going to be saying, no, we need to cut it. We need to get rid of it. It's not working. And then not even talking about the trust funds and not even talking about the benefits, the money that goes to benefits, you're going to have politicians that are going to be talking about cutting the Social Security Administration's budget. So they're not going to be able to hire enough people in order to handle situations like this. I mean, if you have people that are short-staffed, okay, and I work for local government, I know all about being short-staffed and how it impacts your services. If you have an administration that's short-staffed, guess what? You can't do all of this stuff that you're asking them to do. And so if you're looking at this as an issue, paying money out to people who have passed away, then guess what? Defunding the Social Security Administration is not the way to do it, because you're going to have even more of that happening because you have less people to look at it, to look into it in order to put a stop to it. And so, I mean, just think of this, and I'll leave with this. If you have to spend 30 minutes on the phone or an hour on the phone or 2 hours on the phone, would you do that if you're in a situation where you had a loved one that just passed away and you want to call and report the fact that this person is no longer here and to stop sending those checks? Do you think people are going to sit on the phone for 30 minutes? Probably not. And so what you need more staff in order to handle situations like this, at least to get everything under control. And then maybe you can work out different computer systems and work on the communication, and maybe that will help this whole situation. But defunding the Social Security Administration is not the way to do it. So I want to know your thoughts, so let me know in the comments below. If you like this video, please give me a thumbs up. Please subscribe for more, and I'll talk to you in the next one. Bye.